going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone riding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week and a look forward at what might happen in the next week and some fun stuff in the middle. We're going to have Jack Gleason back next week as he made a big call on this show back a couple of months ago after the flash crash, saying that, well, the stock market had projected to a big gain after that. I didn't agree, but man, was he right. So we're going to get him back here and look at that. This week, well, the stock market was choppier as we've had some correction going on, but it has not been much as the market has remained strong. Everybody was waiting for the payroll numbers, and they came out on Friday. Big number, 271,000 jobs created after only expecting about 185,000. Unemployment number at 5%, which is the low for this cycle. And of course, everybody questions that participation rate and what the real numbers are. So, it's kind of a fudge game going on with the U3, but U6, which is a much broader measure, still is quite a high number, as a lot of part-time workers out there and a lot of people have stopped looking for jobs. Bond market, well, it cracked big time on that news, down 2 full points on Friday, and it has been very weak. Of course, the dollar moves up strongly when there's an anticipation that rates are going to go up, because when money moves, word can do the best, and if the U.S. is going to have the higher rates, well, money's going to come here into the dollar, and that breaks gold, of course, in a big way, and gold has been on the downside all week long. We were looking for that, some weakness towards the end of the year, and we are sure getting it as gold has had a big move. Oil had a big move up early in the week as there was a bit of a short squeeze going on, but then talk of glut came back in, and the oil market started to move on the downside. Of course, earnings were still in the earnings season. We've had a lot of earnings reports and a lot of big movers on earnings. So what we're going to do now is we're going to look at our chart of the last 5 days in the stock market, a 60-minute chart that will give us a sense for what the background news was, and here you go. So let's take a look on this day by day. The gray area is the area of the overnight trading, and the white area is the area of the regular daytime trading. So Monday, it started out right here. China was actually weak, but we're going to look at a strong Chinese market for the rest of the week after that, as it was down about 1.7%. Oil moves lower on lower China demand. Chipotle was the big mover of the day on an E. coli scare, and they were temporarily closing some stores. And Hewlett-Packard up 13% after the split. HPE is the other symbol right now. So what happens overnight? Well, they get a bit of a dip and then come back. But look what happens Monday during the trading session. It's a big, strong up day, and you could see that channel as it moved its way on the upside. Comes Tuesday, well, Eurozone softer, Japan down about 2%, and oil sales, they were stronger. Oil surges over 4%. There's some fear about Libyan and Brazilian production concerns, and energy sector gets a big lift. You see this big oil surge right here where I have it marked, pushes the stock market up most of the day, a little bit of a weak close. But that really was oil stocks moving the markets up. Comes on Wednesday, Eurozone, well, strong. China pops really big, 4.3%. And that is related to the linkage with Hong Kong. That's some old news that comes out again. Like 4 or 5 months ago we heard about that, but they liked hearing it again. Volkswagen, well, that's still collapsing on the downside, and its airbag issues grow. That doesn't put a whole lot of selling into the Eurozone markets, because that one did affect it before. ADP private sector comes out in line at 182,000 jobs. And Yellen gives a speech on bank regulation and says banks are healthier, but there are still problems. And a December rate hike is data dependent. Now, that was sounding like that was a little more hawkish than she has been. And then the ISM comes out really strong. And before you know it, the market is moving on the downside. By the way, Bitcoins have been soaring as China has made easier access. Here's that Yellen speech. You see that red down arrow. As the oil inventory number comes out at the same time, oil stocks start to get really hit. The market gets worried as soon as Yellen seems more hawkish, and you get this down day in the market here. Comes Thursday, not a lot of background news. Now, China is up really big again, 1.8%, and U.S. productivity and manufacturing is really strong, and that hits the markets because, well, they're concerned that interest rates are going to start going up. So we had that dip on Thursday. Comes Friday, well, overnight, not a lot going on. You can see that waiting for the payroll numbers. When the payrolls come out, it's kind of a big reaction to the upside for a second, and then a lot of selling comes in. China is up again, 1.9%. How about almost 10% in just 3 days of trading? The Eurozone, well, that eases back, but then it pops back to the upside after the payroll numbers come out. That big payroll beat at 171,000 and the unemployment rate at 5.0. Those are all much stronger numbers. And the average earnings, now those pop up by 0.4. That is a hot number, and that is also going to encourage the FOMC to start raising those interest rates. You get the big crack in the bond market, the dollar surges, gold falls, and of course the banks are strong on prospects of a big rate increase. So of course, as interest rates go up, then that gives the yield curve a little different picture, and then you start to get some thoughts about the earnings moving back into the banking sector, and well, that would be bullish for them, and you get to see that there's a lot of bids that came into the banks and financial sector on Friday. So that's basically what happened in the last week in the stock market. We're going to take a look now at what has gone on in a lot of these stocks as we take a peek at what some of the best and the worst stocks of the week were. We're going to start out in the category of the best of the week. First one that we are going to look at is Autodesk, ASK. They had some news that came out that said that Sachin Head Capital had taken 5.7% stake in the stock. They're an activist investor, and that stock, which had been set up on kind of a positive note anyway, just absolutely flies. Ends up around 18% gain on the week. Take a look here at this amazing chart of Autodesk. Let's move this in for you, and you can see. Now, we're going to look at a lot of weekly charts. For those of you that are unfamiliar with the way I do charts, I look at cycle charts, and these are cycle brackets on the bottom. You're going to see a lot of variations in here on what these cycle patterns look like, and generally, this shows you where there are rising phases and declining phases. You could see that right in there, rising phase and declining phase. Well, here, this one started a little bit early, but look at this stock as it flies up here. One of the best of the week, an 18% gain in there on Autodesk. Just absolutely super. We're going to stay here and look at a few other stocks in here that have been great this week. Let's take a look at Diamond Offshore. That's a DO. This is a stock that is in the driller category. They have a big gain for the week. Now, this stock has been so beaten up from the 60s all the way down to like around $16. Take a little closer look in here, and you could see that green zone. It's been a positive stock. They reported earnings that were a huge beat. Now, with rig counts down so much in this industry under so much pressure, you wouldn't guess it could have that kind of a week, but positive week. Here you could see two cycles pushing up, and that is what gets you the rally in here. Here's the 34-week moving average down here, that blue line, and you can see 34-week moving average tends to be a resistance area. So this stock is moving up to resistance, and with the oil problems so significant and at 34-week moving average coming in play, I would guess the Diamond Offshore is not going to be able to make a lot of upside room. Next couple of stocks we're going to look at are stocks that are related to China. Next one is KNDI, Candy Technologies, Chinese stock. I look at this one as it has perfect cyclicality in here and moves up into the Fibonacci confluence of resistance. And those of you that subscribe to us and get our charts, all this information is in there for you. So Candy electronic vehicles from China, and has this giant move in here on the upside, 16% on the week, just super. See, it breaks through that resistance area and gets to the next one, and here you could see the important cycle lows right in here and the beautiful cyclicality as the stock turns up right on the money, perfectly in that cycle pattern. 18% on the week for Candy. Let's stay in the area of Chinese stocks and look at Baidu, B-I-D-U. Just great action in here as China, of course, up 10% on the week, while Baidu's up 13%. Big beat in there on their earnings this week. And now coming up to this 61.8% resistance level at about 207, trading at 198.5 as I do this. You can see there's some more resistance right there at around 210. So it's got a little bit more room. You can see the cyclicality in here, and we expect in this area for it to roll over and then start to do some correcting in this here corrective phase right there. So that's a look at Baidu. Take a look here at Tesla, TSLA. They're up 12% on the week, 10% increase on the earnings day. You know why? Because they didn't lose as much money as expected. That's pretty good, huh? Well, their Model X, do you expect that to sell that well? I don't. It's super expensive and kind of ugly, to tell you the truth. This is, you could see that flash crash low actually came at a good time for the cyclicality that we're looking for in here. Then it rallies and sells off. That's kind of this cycle pattern that you see here. We believe, you see that dotted line right down there, and you see that 34-week moving average, that this is going to roll over again and get some selling coming in here. So this is Tesla up big on the week on not losing as much money. How do you like that? Well, that is what happens when investors get surprised. This is not a good pattern. I love their cars, Tesla. You got to say that other than the Model X, I mean, before that, the Model T was, Model S, sorry, was just absolutely a phenomenal car, and it remains so. Overall, of course, electric cars probably the future unless it's fuel cells. But it's a long way before they can produce enough cars probably to warrant this valuation, and we will expect to see Tesla pulling back again. Let's take a look at a couple more stocks in here that had good weeks. Got to look at Facebook. Now, Facebook is a stock that over the long term, if you've been following me, I've been really bullish, man. Back when it was in the 70s and 80s, I talked about it going up to the 90s and 100s. And sure enough, here it comes, just an absolutely beautiful move here on the upside. And we'll take a look here at this stock of in this area of social media. Facebook, here is this chart as the stock has just continued to move on the upside. So you can see in here we've had this area of Fibonacci extensions. It got through this one right over here, but then started to pull back this week. As far as cyclicality goes, well, this low right over here was the important low. It's in this rally phase. I think any modest pullback in here is still going to be a buy, because I think it's going to try for that next extension level up there around the 113 area. So that is a strong looking pattern in Facebook. Let's just look at one more stock on the best of the week, and that is NVDA, NVIDIA, up 14% on Friday on this huge earnings report. And this one you get a little different picture of the cyclicality in here as it gets this big move on the upside this week, up about what it gained on Friday is what it's up for the week, some 14% in the specialized semiconductor category. Now look at the cyclicality in here. You could see these cycle brackets, and I'm just going to complete the enveloping in here so you could see how this works. And in this rising period that just lasted through this whole cycle, when you get that, it's just called a right-hand translation. You only get a little bit of a decline in here, and then it moves up again. There's only a little bit of time for decline. There was really a good tell in here in what is called a high and tight rectangle. Here you could see that very bullish pattern right there as the slim ribbon, which is one of our momentum indicators, turns positive way down here at $22 in NVIDIA, and you can see the gain that it's had after that. And then this bullish high tight flag, and then this giant up move in here today. So NVIDIA just absolutely a great pattern in there, and only a little time for pullback. My guess in there is that it pulls back somewhere into the support zone where it broke out from, maybe a couple of point pullback in there, and then I think you'll see NVIDIA moving to the upside again. All right, now we switch to the worst stocks of the week, and I've got a lot to talk about here. The top 10 worst stocks that I looked at on my list of stocks of about 330, all in the category of precious metals. All the gold, silver stocks, GDX, absolutely getting hammered. I'm not going to show them all to you, but I will show you a few so you get the idea of what I'm talking about. We have been looking for a decline in gold through the last part of the year, setting up what I think is going to be, well, something quite different later in the year. For those of you that are members, you can go see my Gold Big Picture video in our member section, and you'll get the idea. Those of you that are not members, well, it's time to become one. It's not expensive. So let's take a look here at GDX first, so you get an idea of this alignment, because on the cycle patterns, because this looks a lot like what we were looking for in the gold market, and you can see in here the damage that did occur in this GDX. Let's get a little closer look. We're looking at the weekly pattern in here, and we'll just take this one big cycle right there, and it's got 3 small cycles in it. You can see that. Actually, the gold pattern is very similar with 1, 2, and 3 cycle patterns, and this declining period right in here. So this takes you through part of December, maybe towards the end of the year, and then you get into a much more favorable period right over there. These are all of the gold stocks. Let me just bring this down so you can see that are in the GDX. Those are gold and silver stocks. And we'll take a look here at just a couple of more of these stocks that have gotten really hammered. You get a sense for the how similar they are, how much in synchronicity they are with the gold market. Here's that same pattern that you can see in Newmont Mining. Also, this cycle points to the end of the year for weakness in there. And let's take a look at one of my favorite traders, GOLD, which is Rand Gold. And you could see the same type of a pattern in here, which points to a decline all the way through the end of the year. So gold stocks really were getting hit this week based on the weakness that we have seen here in gold. Material stocks got it also, though, as they followed suit on the downside with FCX, Freeport down about 7%, BHP Billiton really having an ugly looking pattern there. That one is down about 7% also. Let's look at a bunch of other stocks really quickly in this category of worst of the week. Funny that all you have to do is get the market just holding a little bit, not moving sharply to the upside, and some ugly stocks do start to come out and surface in here. Let's take a look here at Trip Advisors, TRIP, and this stock, well, I'm going to show you a pattern in a second on the daily chart that is extraordinarily ugly. You can see the downturn in here that we have forecast in here. This was on my list of riskiest stocks for the year. It's actually been really choppy, and if you look at the close right over here, well, it has hardly changed now for the year with all this chop. we're looking for an last part of this year on the weak side in there in TripAdvisor. And what helps me believe that? Look at this giant island top that has formed in here after this big upside gap in here and now this big downside move. So TripAdvisor in here, this is not a good looking stock when we look at that. And we're going to look for some more struggling for this one in here in Trip. Take a look in here at CMG. Talked about that just a couple minutes ago, that they had come out and talked about the fact that they were temporarily closing stores because of an E. coli scare, 43 stores. Here's what's really interesting, okay? Look at this beautiful top right in here. That top came with this perfect downside gap and an evening star. That's the candlestick pattern. Right in here, this big gap is on earnings. There's the earnings report right in here. And then it continued down. Now this right here is that E. coli scare. And take a look here. I'm looking at the daily chart. That is a hammer bottom. So what that says is that we are likely to have made a temporary low in this stock. Where would we look for a rally in CMG? Well, that would be up to the slim ribbon right here, the middle of it, which is the 13-day moving average, maybe coming down in here. We'll call it maybe 625 on the stock. It's now about 605. So we're going to look for a bounce from where it is now to 625, 630 on the stock in Chipotle. So that's CMG. Let's just go back to the weekly chart in here, and you can see our projection based on these cycle patterns and based on this big breakdown top. Notice the megaphone that formed in here, this broadening top that was really screaming at us that this failure was important. So now what we're going to look for is a few more weeks on the downside, and then an attempted rally, and then down big. We're looking now at the intermediate term. Remember, we said bounce in here a little bit. We don't think that bounce will hold. It'll probably come down again after that. So that is a look at Chipotle. Take a look at Time Warner. They beat on earnings. TWX. But their guidance was really bad. Look at this chart in here. So you could see that little blue timing spike, as we call it. That was signaling that we expected the low to be over here, and you could see the low is right on the cycle patterns. It gets the rally to the upside and then has this big break over here on their earnings. Basically, it's on their guidance, not so much on their earnings. And here on the daily chart, you can see this beautiful evening star failure right at the 89-day moving average, this big down day, and this stock is really finished now. All the upside momentum lost. You see that little blue arrow there is saying upside momentum is gone, and that is suggestive of the fact that the stock has got more on the downside. Qualcomm, another really big loser. QCM, I'm going to put up this chart in here. This chart shows you what a massive breakdown looks like when you look at this chart. This chart was really bad and just has continued on the downside in a big way. Here is the weekly chart we're putting up in Qualcomm, QCOM. You can see the cyclicality in here. All of those spikes on the bottom point to the important cyclical lows. After that were rally phases, you can see that, and the stair-step downward motion that you've had this whole way on the cycle patterns. This was the low right in here. It tried to get a rally going. It could not hold up very long. This is what's called a left-hand translation and a massive breakdown. We're looking for a continued sell-off in here right through the end of the year. Take a look at the daily chart in Qualcomm, and you can see this big breakdown right in here that occurred on this massive down day in Qualcomm. They reported earnings, profits dropping by 44% on a big miss and a big negative looking stock. So those are the charts I'll show you. Want to just mention Whole Foods. They had a big miss. We're looking for that stock to continue to be weak for about another month based on the patterns. Hertz down about 8% on the week on a really bad pattern in there. Earnings coming out, well, that would be Monday this week, 11/9, before the opening, and a couple other stocks maybe to keep your eye on that I think are setting up for some drops, and that is CVS and Target. All right. Here is the calendar for the week. We have, well, a lot less earnings reports than we've had, and not a lot of big economic events coming out either. You can see, well, really thinning out as far as earnings goes. Stuff that I trade really on Wednesday morning, that would be Macy's. That's a big one that I think I'll probably be looking at. Other than that, well, I don't see a whole lot in here. Maybe Nordstrom's, JWN, of things that I pay a lot of attention to. Economic events really thinning out also. Nothing really big this week. So there is your earnings and economic calendar. That is it for the opening segment, and we're going to be right back with your emails and tweets. See you in a couple seconds. Emails and tweets. Have some great emails this week, of course. During the week, I did a video in my video category called Style, Strategy, and Plan, and that was on swing trades, understanding strategic approaches to swing trades, and had a lot of great comments on that one. Share a couple with you. One is, thank you, Steve. I've been doing so well simply shorting puts in uptrends that I've avoided the kind of multi-leg strategies, and I know that I'm missing opportunities in downtrends. This video was a huge help. I get some homework to do for sure. In downtrends, I think it's time for me to spread my wings. So I covered that about how to get into advantageous entries on trades, of course, in both directions. Another one is I thought that the video on style, strategy, and plan was really good and a great explanation for practically measuring the risk as it relates to where you identify short support and resistance levels. He says, moreover, putting on the trade in dollar terms, which is what I did in there, explaining the support and resistance and how to look at it in money won and money lost, that he says that was really helpful in evaluating the risk. Really good, and I'm so glad that was helpful. Next email says, hi Slim, thanks as usual for all you do. I'm curious about the impact of HFT, high frequency trading, algo trading, black pools on charts. Particularly the shorter term day trading, swing trading periods. Is it still possible for the smaller trader to use technical analysis to trade given the increased control that they exert on the market movements? Does technical analysis still apply? Boy, that's an interesting question. For me, it seems that if high-frequency traders have an influence at all, it would be in the very, very short-term movements of the markets. Their holding periods are often less than a second. They're trading in between the pennies a lot. So, if they do anything, they keep the markets really tight. I think that's in some way a negative effect for the scalper, for the day trader, more than how it affects technical analysis in how it keeps the market so tight. So what we, as scalpers, day traders, and I've been that most of my life, we live off of these movements in the markets, the noise essentially, and they have tightened it up so much that the markets don't wiggle a whole lot. You might have noticed that, and that's been that way for a long time. I think they're to blame. On rare occasions, the markets can go wild, and we saw that happen with a couple of flash crashes and some individual stocks that have done that, where they cause some wide swings, but it is really rare. Long-term wise, I don't think they have any influence in the market at all, and I totally believe in technical analysis, and I don't think they can wipe out the value of that. Next email is from KC, and he asks me about Under Armour, UA. So we're going to switch over to the Under Armour chart and take a look at it. This is UA Under Armour. Got it up here. There we go. And this one, KC says, do you think the 34-week moving average touch from 2 weeks ago was the low? So 34-week moving average touch. Let's take a look at what he's talking about. And let's blow this up, and here you could see, look at this beautiful 34-week moving average supports. This is a 2-year chart of Under Armour, and you can see this is what he's talking about, that touch right there. He says, Do you think that that was the low? Everything I see on the shorter time frame looks pretty negative. And I could see it falling at the 89-day moving average and retesting that in this area here of 88 to 90. So, you make a good point. That 34-week moving average is a real important area. You could see, it's actually screaming right in here. Let's take a look at the daily chart and see how that lines up. So, what you're saying is that you could see a test of the 89 of that last low at the 34-week moving average, and saying that it's up at this 89-day moving average, which is resistance. That's absolutely true. Now I'm going to go back to that weekly chart in a second, but I wanted to show you this. See this big downside gap in here that was on earnings? This is like a bear flag in here, right? And this is a negative momentum signal that we got right there. I think it is highly likely that we're going to get a test of that 90 area, so I'm right with you on that, KC. But then after that, let's go back to this weekly pattern. And for those of you that follow my cycle analysis or get the charts, you can see these two double timing spikes right in here. That's suggestive of the important low period right in here. Now, the stock's going to have to prove itself. It's going to have to get a rally going that takes out that high. If it doesn't in this cycle, positive cycle period in here, and just has a failed rally and moves down again, and that's in this cycle right here, you could see the head and shoulder that would form in that particular case. So this stock really has to has to prove itself right here, and I think that you are really good in your analysis here, suggesting that big point at that 34-week moving average, likely to come down and test it again, but then I think that's going to be a buying opportunity for another move to the upside. That is Under Armour. PC writes me, says, I was looking at Micron, MU, looking to make a short side trade due to the fact that weekly cycles, I've got so many people that now are students to my cycle analysis, says the weekly cycle bracket says it's going to roll over. I'll show you that in 1 second. However, it says it looks like we're coming off of a double bottom. So there's some positive momentum to the upside on the weekly. So he's looking at the daily and looking at the weekly. He says it looks like there's, if we move above the 89-day moving average slightly, that would cancel the bearish assumption. So he's seeing two things in here, and let's take a look at that chart so that we can make that a little bit clearer. We're going to look at MU on the weekly chart is where we're going to start, as we always do. And here is that weekly chart, and here is that double bottom that PC is talking about. So he says that it looks like the cycle brackets are rolling over. So let's take a look here at the cycle brackets that he's talking about, and he sees this right in here as this rally and then this point rolling over right here. So he says that looks like it's a reason to believe that the stock is going to move down. Now, when you look over at the daily chart, he says there's some, by the way, he says there's positive momentum to the upside in here. Where's that coming from? Well, it's coming from this Hull moving average that you can see right there. You could see it had negative momentum in here and then turned to positive momentum right in there. So that's what he's looking at. The next thing we're going to look at is the daily chart, and we'll move this over. And here is the support and resistance that you see in here that our chart subscribers get to see. And what he said is that it looked to him like there was a downside trade coming, and sure enough, after we get this move in here, there was that downside trade, and you could have made some money in there for sure. He says he wants to know if his bearish assumption should be canceled because of what we saw as positive on the weekly chart. He wants to know, and this is a great question, what trumps what? So here he has a bearish assumption on the weekly chart, also sees it rolling over, but he sees positive momentum on the weekly chart also. Truth is, I see this thing is stuck. So we have this positive momentum on the weekly chart, but resistance you could see monstrous right over here, and then you have the support right over here. So if you got in the short side trade, you really got to start thinking about covering it over here And then based on the positive momentum that you suggested, I think it's probably a buy and likely to get another move to the upside. So to me, this area right in here is a long side entry and looking for another move up towards the 19 and a half area. So that is what I told him, that I think that the longer term momentum does trump the shorter term pattern. So I would be looking for the long side trade there. Good question. I hope that was clear about how there is a conflict between what he saw as the chart rolling over and looking like it was going to come down, but the longer term pattern suggesting with momentum that there might be some more rally. And basically, it's kind of stuck in the middle right there between the 16 and 19 and a half area. I think the trade is to buy it nearer to 16. And you got a good trade in there if you've been short it the last couple of days. The next question is from EH. He says, Slim, I really am enjoying the shows, and I have an observation. This is a good one. I find it interesting that basically you and Pete Ballmat on Tasty Trade have the same views and a direction for the grain market, but you arrive there in very different ways. He looks at reports, weather patterns, and news. As an observer of both programs and trying to get my own style, it's hard to figure out how to learn and invest in this stuff, basically, when I look at technical analysis. So both Pete and I were looking for the grain market to firm and move to the upside pretty soon. Truth is, Pete is great. He's very knowledgeable. Really enjoy peek in every once in a while. When Pete, in this case, when you're talking about weather reports, news, that kind of stuff, weather patterns, that's all really fundamental stuff. And I believe that the charts reflect the fundamentals and even beyond the fundamentals. That's because people in the know, people that are investing based on some of these things, they have an influence on the charts. So the charts kind of move ahead of the news. That's why often when there's been a big move, when news does come out, it goes the other way because, it's already priced in. So that's why I actually really believe that the charts are a strong reflection of what is going to come, what's yet to come. Of course, when you look at earnings reports, sometimes that doesn't exactly work because they bid stocks up and then all of a sudden get disappointed on earnings reports, and you can never really tell on that. But sometimes you get a good earnings report, the stock's been moving up, and it doesn't go up anymore because, it's already baked in the cake, as they say. So, both styles, I think, have strengths and weaknesses. You've seen me be right and wrong. You'll see Pete be right and wrong. And really, it's a matter of method and expertise. I think Pete and I are both experts. How do you like that? JP writes me, he says, I always enjoy your videos. I have a question about the long-term stock market analysis. You mentioned that around February to April, we may see the market move down in a correction based on your cycle analysis. Noting we're in a pre-election year, could the stock market hold up at these levels we are now for political reasons until after the election? By the way, that February to April date that I've been putting out is really the date that I expect a low. Yes, I expect some intermediate term weakness that has the stock market moving to the downside again. I still believe in that long-term view, and I think that we're going to see some weakness turn into the market sometime later this year and then into later winter. And I think it's going to be pretty significant. So I think that low that I'm expecting to come at that time, if we do get some pre-election buying, there's plenty of time for that. If you have a low in late winter, early spring, you could rally them all the way through November, right? Well, who knows, but I'm going to be careful here because I think there's weakness coming. Judd Lilyha tweets me and he says, I got 2 people to sign up for your membership this week. All I have to do is show them your market week and they're sold. Thanks a lot. Always appreciate your support. Lots of people referred people in this last few weeks because we have a lot of new members that came on. And what they especially like is my short-term view of the market. That's really what I think sold them when you brought this show to them, Judd. And that is coming right now. So stay tuned, and I'm going to bring you my short-term view.
Hi, I'm Epiphany, your askSlim spokesperson. Here's important news you can use. With the askSlim memberships, you can raise your probability of success as a trader or self-directed investor. Be better prepared for the coming week and make informed decisions when you watch our weekly show, the askSlim Market Week. Archives to the show and more are in Level 1. In our videos in Level 2, get help with trades for all styles of market participation. Better understand 6 sectors of the futures markets, learn technical tools, manage the impact of your emotions, and apply analysis of stock sectors in the big picture of the major markets. And you'll have access to our ever-growing video library. Level 3 is our trader support. Call it Coaching Light. Ask Slim for personalized help by email on the technical, strategic, and psychological aspects of trading. Or go all in with Slim's charts right on your TOS platform. Level 4 gets weekly updates with annotated charts on over 300 widely followed stocks, futures, indexes, and ETFs. Slim's unique cycle charts add the dimension of timing to help you improve your own analysis and strategic approach to the markets. Learn more and choose the membership that works best for you at www.askslim.com/membership.
For the short term, well, stock market finally rested a bit, didn't give up a whole lot of ground, but a little bit, not exactly the shape that I thought that the patterns were going to take for the week. Oil, a little bit of a surprise early in the week with a one-day squeeze, but then moved down sharply into the time frame that we were looking at. Gold, we thought it would be weak. Another big break as the dollar got strong on the news about the employment numbers and the euro following the gold market on the downside also, all pretty much in line with what we were talking about. I would say back in the groove. We're going to give us a 70-75% short term on the week. Well, back in the groove maybe, except for the stock market. Let's take a look here at our short term view of these 5 different markets that we're going to look at, plus we'll also take a peek at the VIX market. Here we are going to start with light crude. Now, this is really interesting because we were talking about a swing trade in here where we thought there was going to be a big break right down there to that target. You see that? We had that in there last week. We had gotten that scare as it tried to get up through the resistance but could not hold and then moved sharply to the downside. So see, that's day 9 off of that cycle, day 8, day 9, just great cyclicality in here in light crude. Well, I will say that we're going to call that pretty much right on. Let's take a look at what we think we're going to do in the next week. Well, here you could see that this time frame that we're looking for this low, well, that's pretty much in line. Maybe we get another day here of attempted on the downside, but then we think we're going to try to move on the upside in here. So this bigger cycle right in here, I think it's lengthened out by a little bit. And because of this shorter pattern, we're going to look for like a 7-day period in here from low to low. That puts us out, about a week and a half before we get into what we think is going to be a much better period. So that would be right in here, and we're going to say that timing-wise, that looks like we're going to say around November 17th, middle of the month, when you have a better chance for an upturn in there. So we're going to look for a rally up into this resistance zone. This was the minor support you can see, and it couldn't hold it as it got down through it. Now the resistance number right here, let's take even a closer look so that you can see that. And that comes in right over here at about 45.75, 45.80, up to about 46.30. So this is the resistance zone. We're going to look for an attempt up there and then probably pull back, something like that. And that's really going to give us probably a small up week in oil. So that's kind of what we're going to look for. Maybe just an attempted rally that fails, a small up week or not much change. Then later on into the next week, something like that happening and setting up a much better period for light crude. So we got that one right. GC is gold. We thought that it would be moving to the downside in some significant way. Let's take a look here as we look at this closer view. Look what happened here. Now, we talked about this scare and this shooting star, and that looked like it was going to be the beginning of a decline. Once it got under here, we said that is really a problem. And look at this, it has just continued to collapse on the downside. Big number in here, a big support coming in the area of 1172 to 1185. I'm sorry, 1072 to 1085. We're at 1088.50 as I'm doing this late in the day on Friday. And what this really looks to us is going to be kind of choppy down early in the week, kind of sloppy, and then turning up towards the late portion of the week. And then, based on this pattern in here, I would say maybe a rally attempt up in here, 1115, 1120 on the upside may be the best. And then on the downside again into this period in December. So the really looks to me like a lot of still problems for the gold market, some crummy attempt. We thought we'd get a little bit of a rally early in the week and then fail. It didn't get up to the area that we thought it would get up to, but still we thought it was going to be a down bias week and any rally would fail, and all the intraday attempts have done so. So pretty much right on as far as the gold market looks right now. We'll just call some more choppy sloppiness with still some downward bias, and then towards the end of the week, the time that gold can then turn up. Next thing we're going to look at in here is the euro market /6E. We expected that this would get a little bit of a rally and then move to the downside again. Well, you can see it could barely put any kind of a rally. We thought maybe it could get up to the 1130 number early in the week and then fail. So it gets up right over here, not even to the 111 number, and then just goes straight down. So this is the cycle patterns that we're looking at right in here. You can see as we have them drawn in, and that sets up like gold, but a little bit differently in that there's a short-term low due like right now in here. So I would say that we're going to see an attempted rally early in the week, small bounce, and then a fail again like this. We're going to call this a small up week. Well, why do we say that even though it's a downward bias? Based on the timing in here, we think we'll get a bounce and hold, and then in the following week finish this out over here. So we're going to look for a small change, maybe a small little up week here in the euro currency, but overall you could see the downward bias in here still. Now, once we get past about a week and a half's time right over here, similar to what we have in the time frame in the gold market, this right over here looks like a better period for the euro currency or a weaker period for the dollar. So we're still going to look for a sloppy market in there. Let's take a look at the bond market /ZN. We're going to look at in here. We said last week downward bias, a narrow week. Well, downward bias, absolutely. A narrow week, wrong. So I think we only get about half credit for that one. Not anticipating this big of a decline. We thought that this area around the intermediate 50% might hold it. Now that area becomes near a resistance. You can see that in here. So what we're looking for in the next week, we're going to call it right in here, bottoming in a day or so. Kind of a choppy up market in here and a small up week, and then after that another down week right in here. This might mean a little more downside in the stock market correction that we see going on, but basically not a lot of upside in here. We think if we can get a rally in here, it tests this resistance area right in here, 126.20, 126.22 right in there is approximately the area for a bounce, and then roll over again. The risk is still to the mark rallies will fail in here, and we're going to call this a narrow week. Narrow week with support area being around 528, which is right near where it's trading right now. See if I can find that weekly support in here. No, it's not in there, but right around this area, 125.28 or a little bit lower, and this area up here around 126.20. We kind of think we're going to spend the time in that range for the next week as it tries to get a little bit of a recovery and then rolls over. We'll call it a small up week because of this small cycle in here. And you can see a lot of what we're looking at in where we are now in the first four markets that we looked at all kind of look like narrow weeks based on where they are. Well, because most of them have had some pretty sizable drops. So we're kind of not looking for a big week in most of these, kind of just some minor recoveries. But the major trends that are moving them are not over with as far as gold or the euro goes, or even the bond market. Light crude, as we said, that one probably just a little bit of a small up week. Let's talk about the stock market now. So what I thought last week was that we were going to have a brief correction. It was going to move down and then move back up. Well, that's not the shape it took. It kind of got a couple more days on the upside and then went into its correction. What it's doing is extending out the short-term pattern a bit. That's going to set us up for the potential for a little more corrective period in here in the stock market. So the week that I was expecting really in this week looks like it's setting up for next week as the time frame has pushed out just a little bit. I had expected the S&P 500 to pull down to around the 2055 number, and as you can see in here, well, it pulled down but only got as low as 2083. So for this next week, what I have drawn on my notes in here is this. Just that kind of a pattern in there where there's room for it to have a little more downside. You see that 12 bar low right there? That's off of this 16 bar low here. This confused me. I took that 11 as the important low, but that's not the way it's shaping up when you look at these patterns, because you can see in here, this was 16 days, this was 16 days, this was 16 days, and so far only 12. So we're going to look for a little more down early in the week, testing that area of, we'll call the support at around 2080 down to 2066. Those are the two supports right there. Potential for early in the week, but then back up and back up into the resistance zone. We can't, it's hard to really tell how, if this is going to be, 14 days or 16 days right in here. And anything in here is a buy, really, because I think the probability is high of testing these resistances up there one more time. And then we have to look at the market and see how much is left as far as upside that it can make. And I'm guessing the area in those resistances that we talked about, which were in the area of 2109 to 2120, and the old high 2134, I'm guessing that is going to be pretty tough to get through. So we're going to see this week a little pullback and then more on the upside for the stock market. When I look at the VIX, this pretty much confirms the pattern that I'm suspicious of in here. And take a look here at this VIX pattern. Here is the daily chart in here, and I'm going to show you the weekly also because of how important this is. This right in here looks like about another week's time. So what I'm looking for, remember, in the stock market is for it to just come down a little bit and then go up some more. I think this is going to do the opposite, maybe play around in here and then go down some more right here, setting up what is a potential for a big move up in the VIX. When you look here at the weekly pattern on the VIX, you can see this setup right here. This is bottoming, and we've already, tried to make a bottom here in the VIX at around just under 13. Maybe it plays around here a little bit more, but after that, we're going to get into a sharply rising period. And that's one of the reasons why I think the stock market's going to fail in this area of resistance between this 2109 area and 2134 area after one more time on the upside. So that is a look at the short-term view. Man, I hope that there was a lot in there that is valuable to you, and I hope you're able to make some money on it, and we're able to do so in the last week. Next week, like I said, we're going to have Jack Gleason on again, and we're going to see what he's saying about his Fibonacci numbers, because he was pretty much right on in the last time we had him on here. That's it for Market Week this week. Make sure you could send me emails, let me know what you think, and of course, if you're not a subscriber, it's not very expensive. Go in there and you can see all of our videos that we put out every single week. That's it. I'll see you next week, and I am wishing you great trading.